Good morning, everyone. We just now, literally this second, just got data coming in on JOLTs job reports. We're looking at that today, guys. We're also going to be taking a look at what we're seeing here on the chart. We did have a nice bounce level, came in right there. Right there, where we've been talking about. That is the Bitcoin's last stand, Bitcoin's last hope, as I said on the thumbnail today. A little Star Wars reference there for you guys. But the thing that I'm watching is going to be this moving average right here. Check it out, 300-day moving average. Where you at, moving average? Right there. Nope, that is not it. That is it there. 300-day moving average right there is where we got our bounce. We're going to be taking a look at this historic level, what this means for Bitcoin, and what we're hoping to see this week, but why it may not matter. It may not matter. Why? Because that is the going against what we may see the federal government trying to do, guys. We're going to be breaking it all down today right here on the Morning Market Report. Let's get it. You guys know what time it is. Class of the session. Let's go. Oh yeah! Shout out to everybody in the chat. Who all we got in here today? I saw somebody like in early. Crypto Prince is in here. Good day, ladies and gentlemen. Good morning, Army Piper from Alexandra G, the Mod Queen. Harp username. Who else? Who else we got in here? Harp username Alexander G. They had a conversation of their own accord. I love it. And then we got Crypto Coin Mindset in here with us saying good morning to everybody. I'm doing a show with him as of right now. Today, I'm going to be doing a show with him. We're going to be talking about why the federal government may want a recession to actually happen. Crypto Billy in here. Uncle Jesse Gellick in here in the house with us. Who else is in here? I don't want to miss anybody. Roman Brave said, good morning. Good morning to you. Welcome, Robert Mulligan. Bro, what's up, man? And Little Fish might play in here with us. But you know who else is in here with us? I'm wearing a hat today. It says Ron Johns Cozumel. It's Cozumel man himself. What is up, OC Guy? How you doing, man?
I'm doing fantastic. Just getting used to the new timing here. For me, it says 1 hour short. So at this point, it's 8 a.m. I was used to, start eating some breakfast before. So maybe that same topic of what cutting OC eating in the show might be coming back. I don't know. Could be.
I love it. Let's do that. I love catching OC in the middle of a bite of breakfast. So yeah, good morning, man. I appreciate everybody that's joining us here right now. If you guys haven't done so yet, Ron John hat looking good. Appreciate it, man. Yeah, I was supposed to meet OC down in Cozumel. He couldn't make it because he had a family emergency. And so I had to stroll around Cozumel by myself. Shucky darn. I went and had a shrimp torta because they got some delicious shrimp tortas down there. Kamala's, is it Kamala's? Was that the place? Camilla's was closed. We couldn't go there. So we went to another place over by the ice cream shop where we had the Aquas Frescas. When we were there with you? Yeah, we went to the other place over there. It's really good though, man. So, we got a lot to unpack here. We got markets pulling back right now. I want to talk about why we're seeing what we're seeing on the charts and why it matters on what we're seeing on the economy side. So let's go ahead and just jump right into the news today, guys, and get all this broken down for you because there's a ton of info to go over today. We'll just start off over here on the dashboard and we'll be right back with you, OC. So taking a look here, guys, at what we are seeing besides the line of my camera. There we go. It's gone. On the risk indicators right now, we're sitting, according to Into The Cryptoverse, sitting at a 29.2% risk level. Total market cap coming in at $2.64 trillion right now. Trend line on this, the median average of the crypto market cap is coming in at 3.56, which means we are currently 25.89% undervalued. Looking at the risk levels on Bitcoin right now, 47.6%. That would put us at a DCA times 3 right now. So we're doing the Piper plan with an entry and take profit levels, all part of the Piper plan over there in our Discord. And that would be a times 3 DCA for this week. Yes, Buck, it was, of course, as you know, a Absolutely a level of Tuesday being a better DCA day again. Looking at Bitcoin dominance here, Bitcoin with stable coins is at 60.97, continuing to go up. Without stables, it's at 66.83%. So right now, guys, we are seeing a whole lot. That's that blue one on there. A whole lot of money going into stable coins because the spread is getting wider. It was at 4%, then 5%. Now it's 6%. A lot of people sitting in their stable coins right now. Let's go and see what else we got here. I want to talk about the fear and greed. So we're going to click this, go to fear and greed index, and then we're going to come over here, isolate the end of this chart, and we'll see what the current fear and greed is. Current fear and greed is at 24. We are in extreme fear as of today, 11 March 2025. Let's go look at the crypto bubbles, talk about the current levels, guys, on the daily. Seeing some green, IP, TAL, Ultima, CAS. Looking at the hourly, we are seeing a little bit more that's in the green, but overall, Bitcoin down to 0.3% today, sitting at 80,380. It was down all the way to like 77,000, and we did close the CME gap, but now we have a new one. We're going to talk about that today too. Shout out to Doom User. What's up, man? Fellow veteran in the house with us. Always glad to have you here. Ethereum's down 8.1%. We're going to talk about that too. Why? Because there's a risk of a major amounts of liquidations that we are keeping an eye on. I feel like I am so small on this screen. I don't know why. Let's just bring me a little bit bigger there. There we go. I don't know what's going on. All my cameras moved or something. There we go. We're good though. We're good. So yeah, Ethereum risking some major liquidations. One of them, $182 million, if I recall right. We'll look at that exact number. But $182 million in liquidation risk for the Ethereum Foundation. Yikes. Let's see here. XRP down 0.8%, coming in at $2.10, I should say. BNB down 1.2, Solana down 1.2. Cardano's up 1.2% today. It's at 71 cents. Doge down 6.4, 3.5 for Tron. Pi Network continuing to sell off. Good riddance. Get out of the top 20. You're disrespecting the top 20 space here. Leo token down 0.5%, is coming back in the past hour though. HBAR moving up one spot to number 13 there. It is down 1.9%, just sitting under 20 cents. Chainlink dropping one position to number 14, moving further and further away from that $600 mark, Buck. If you know, you know. 5.6% to the downside there on the daily for Chainlink. Stellar Loom is down 4.6%. Avalanche down 5.2%. I was going to say, I would not be surprised to see this start to go green. I do believe it was Avalanche just had an announcement that came out about doing an ETF. So I think in Delaware it was filed. So that is something that's going on there. Shiba Inu down 5.1%. Sui at number 18 down 5.5. Neutral and flat on the hour at $2.14. Litecoin moving back up the list here in the top 20 to number 19. It is down 6.2%, seeing a little bit of green in the past hour of that, sitting at $88. And then rounding out the top here, the top 20, it is going to be Bitcoin Cash moving down one spot to that number 20 position, losing it to Litecoin. It is down 7.5% on the daily. Let's go look here at what the TradFi side is doing at market open, guys. Right now, Dow Jones is down about 0.75%, 0.74% there to be exact. S&P is down about 0.2%, and the NASDAQ trying to get a run. It's really the Mag 7 that's pumping the NASDAQ up right now. People are starting to buy heavily on the dip for, you know, Tesla and Nvidia and so on and so forth. But I think that might be they might rue the day that they decided to do that today. Russell 2K small caps, of course, getting that 0.52%. Guys, the VIX is moving up. It says it's moving down, but it's actually moving up here in the number. It's at 27%. Yesterday it was like 25, I believe. And so you need to watch the VIX. We are starting to get a little bit lessening of the volatility right now. That's why it's red. But when this thing's above 20, I'm going to show you a side-by-side with Bitcoin. It's really a great indicator of when to just avoid doing anything until this settles down. Settle down, VIX. So we're going to be taking a look at that. I think we're going to see this turn around and go green again today also. Oh, wait, go back, sir. Let's go look at the bonds. 10-year bond is moving up. It's at 4.244% right now. Oil is at still staying above 60. Once it breaks below 60, those oil prices, guys, their oil stocks, I should say, will start to have some pullback. But right now, they are still in a profit zone above that $60 per barrel. Gold is moving back up again. It's at $2,922, $22, $2,922. Silver's at $33. Copper's at $474, up 1.6%. Platinum at $988, and palladium sitting at $960. You guys remember when platinum was like the more precious metal than gold, and everybody was all about the platinum rings, platinum jewelry, and now gold is like 3 times its value. Crazy times. Bitcoin swap to ETH swap, Bitcoin to alt swap, whatever. Gold to platinum swap. That's what needs. We need a chart for that. Let's go check out this JOLTS job openings, guys. This just came out at the top of the hour here when we went live. JOLTS job openings was previously at 7.5 million. Consensus was that it would be 7.63 million. Right now, forecast was 7.5. We came in at 7.74. So we beat consensus and forecast. That is bullish. That means there's more jobs available right now, okay? So companies are not slowing down in growth as quickly as they were. Job openings in the United States increased by 232,000 to 7.74 million for January 2025, up from a 3-month low of 7.51 million in December and surpassing the market expectation of 7.6 million. Notable increases occurred in retail trade, that's 143,000 jobs, finance and insurance, 77,000 jobs, healthcare and social assistance, 58,000 jobs. In contrast, job openings fell in professional business services, minus 122,000 jobs. Regionally, job openings rose across the country, with the largest increase recorded in the West, 90,000, in the Northeast, 82,000. Over the same period, hires rose by 19,000 to 5.3 million, while total separations were up by 170,000. So lots of firings, lots of separations, guys, that they're not really putting into the tally. So if they isolate this by itself, total separations were up by 170,000. It's a swap out of jobs. That's really what's going on here. So that is why we're not seeing a huge amount of movement on the markets today. It's really because of that. I want to talk about Ethereum real fast, and then we'll get into the Bitcoin chart, because in my bookmarks here, I want to talk about this. Well, watch. ETH dropped below $1,800. The Wells, 67,675 ETH, worth $121.8 million, is now being liquidated. Despite depositing an additional 2,000 Ethereum and repaying $1.5 million in DAI to lower the liquidation price to $1,836, the price still dropped below its threshold, got liquidated. Guys, that was a liquidation of $121 million there. Let's go over here and take a look. A wallet suspected to be the Ethereum Foundation deposited 30,000 ETH, worth $56 million, to Maker, the Maker blockchain. You can take loans out against your crypto on it to lower the liquidation price 5 hours ago. Currently, this wallet has 100,394 ETH, value at $182 million on Maker, and the liquidation price is $1,127. Guys, I told you I believe ETH is going to hit $1,200 in the next couple of months. And so if they don't find a way to leverage in some more money here, they are looking at a real risk to liquidation for the Ethereum Foundation. So yeah, a lot of sell-off going on that. Do they want a recession? Yes. I'm going to give you guys a little teaser on this. Does the U.S. government want a recession? In 2025, 9.2 trillion with a T. Tea time, as they have over there in with Crypto Princess's neck of the woods. $9.2 trillion of U.S. debt will either mature or need to be refinanced. The quickest way to lower rates ahead of this colossal refinancing would be a recession. And that is why I believe you guys are seeing the craziness that's going on with the Fed, because I do believe that they are trying to get a recession. Here's a little chart here from the Kabisi letter talking about the trade wars beginning back here in February. You can see another dump happened here as stock market peaks as tariffs ramp up. Q1 2025 GDP estimate to crash comes down even more. Trump says not watching the stock market at all in his decision making, drops even more. Here, a couple days ago, Trump acknowledged a recession may be coming, and then the S&P erases $5 trillion in 13 days. Let's go ahead and jump back over here to the chart. Yes, I caught a meeting. Love it. OC, what do you think? Is the federal government trying to, we'll ask two questions. Is the federal government trying to cause a recession so they can refinance all of this debt that they have without paying a massive, crazy, stupid interest rate that they are right now? That's the first question.
Oh, I was waiting for a second question. But in fact, I want to bring up my tinfoil hat here because I was actually thinking about it, looking at the news, right? What happened when you kind of like build up something? You usually have the power to control it, right? Another thing that we usually see on medicine is just vaccines, right? Regardless if you like vaccination or not, when you control a virus, well, then you can create antivirus on your body, right? So I think this is a little bit of what's happening here. Again, this is a tinfoil hat. Oh, here it is. So let's use it. All right. So this is a tinfoil hat theory. Sorry, and an opinion where I believe that when they're forcing this recession, they can do two things. First of all, blaming on the previous president or the previous administration, and second of all, start controlling the outcome of this recession. Because if you force it earlier, you might be having the means to further direct it to where you want it to go. So basically, that's what I believe that's happening at this point. I believe this is more like a strategic action, but a very, very, very dangerous one.
Okay. You okay? You need some water? Is that orange juice and coffee? That's why you're coughing like that. Yeah, so I agree. So when you look at, we're going to be breaking this down today on Crypto Coin Mindsets channel, guys. Make sure that you guys tune into that. Myself, BC Port Corp, and Keith all are going to be over there. I'm not sure who else is going to be there, but we're talking about, is the government trying to force a recession? And really, if you look at historically, we've had a recession every 10 years. We should have had one in 2019 because of the closeout of 2009, right? And then all of a sudden, as we started to see those recessionary risk indicators start to come to fruition, I should say, we had a COVID-19 and stimulus checks kind of veered that off, kicked the can down the road. So it's a recessionary reset. It's the big reset button for the economy. So the other question that I want to ask, Ethereum. We know your stance on Ethereum, man. You hashtag F Ethereum, OC life. What's your thoughts on all these liquidation threats on Ethereum, man? And is that going to be the catalyst that starts to wreck the entire market when, if we go down and you start seeing the Ethereum Foundation get liquidated, what happens then, man?
Oh, this is going to be a good one, man. I don't know. I mean, let me bring up something here. I don't only say F Ethereum because I just really hate it, right? I mean, it racked me up twice in a week, so I'm still salty about it. But Ethereum is the second most important coin in the crypto market, right? So seeing that will bring a lot of uncertainty around, especially for the new members. I mean, for the rest of us, or at least for me, let me just talk about myself at this point. It is that I don't really care about Ethereum as I care about Bitcoin, right? Ethereum for me, it is the spearheaded of development, but that doesn't mean that something else cannot be taking it over. I mean, we've been talking about, or I do remember, what was it, 1 year ago, talking about Solana flipping Ethereum, right? And nobody was kind of like wowing it. But when did we talk about Solana taking over Bitcoin, right? When did we talk about Ethereum taking over Bitcoin? I would say that, I mean, Ethereum taking over Bitcoin, we did talk about it. And also we talked about Litecoin taking over Bitcoin, but that was a long time ago, right? But at this point, Bitcoin is just the base, is the foundation at this point. Is it going to be pretty? No. Is it going to be the catalyst? I think so, because of the amount of money they have at risk. But also we need to understand that when they get liquidated, they sell, right? And so we're gonna be having those kind of like big money spikes in the whole market because they need to have it backed up with something else. So we'll see how that plays out. This is something that I could be a little bit fearful of because, as you mentioned, this will bring a snowball effect on the market, uh, basically making it worst of what we're seeing. And something that we've not talked about is the S&P 500 just dipping and taking Bitcoin with it, right? So, and then you do that catalyst or that on top of it, right? I mean, the Ethereum Foundation get liquidated, might bring some pain to the crypto market. But still, I'm not gonna be just pulling out of my crypto for my savings account. I remember, full transparency, most or everything on my savings account, it is on Bitcoin. So we'll see if I end up poor or end up a millionaire, right? How that would go, or how that go? Die a millionaire, or no? Wait, try to get millionaire or die trying. Is that how it went? I don't remember.
Maybe. I'm not
Yeah,
sure. I'm
something
not.
like that.
I something like that. So yeah, one. I will say this. If we start, the saying goes, when the tide goes out, you see who's swimming naked, right? And so as we're starting to see this money pull back, these prices pull back, we're definitely starting to see who's overexposed and should not be. And it's going to be interesting to see. This is what we saw, honestly, back in 2022 when we were going into the full crypto winter, not just the bear market, but the crypto winter. And we start get rich or die trying, Crypto Pollo said. Cluck, cluck. There you go. But we started to see what companies were overexposed on loans, which is the same situation with the Ethereum Foundation on Maker. They took out loans against their Ethereum on Maker, and now they're getting called on it for the liquidation level. So, yeah, definitely seeing who's swimming naked. Don't be swimming naked, people. If you're overexposed, you might want to do some risk mitigation, try to fix that, because I got a call yesterday. Well, I got a message and then I called the individual. I won't say any names, but they actually called to say, God bless you, Piper. And I was like, what's that about? And he said, because when you were talking about all your stuff, what you thought was coming with the economy, this and that, I decided to close out a lot of risk stuff, and you saved my 401k. So, it's things like that. Sometimes I sit here and I wonder, why do I show up every day to get 238 views on a video that said was $108,000 the top, with all of the metrics verify why that was possible. Why do I keep showing up? Well, it's because I get people that tell me, Piper, you saved my 401k. So, and that's why I come here every day, trying to help people out. I don't want to be a bear, don't want to be a bull, don't want to be a crypto influencer with a million followers. I just want to try to help somebody, and if I helped anyone, that's why I'm here. You know what? I'm going to help us right now, though, and we're going to go talk about Bitcoin. So let's go jump over to that chart, and we'll come back, talk about some things you need to be watching for tomorrow, and some sentiment and analytics on the some Bitcoin. Where we could be retracing back to. That's what I need to say. Shout out to Alex O Crypto, by the way. That man, God bless him. Alex O Crypto sending the OGs, the Otter gang over here to us, man. Much love to you, bro. And shout out to you. Always a pleasure. I sent him our coffee mug, our Piper Academy coffee mug emoji. So hopefully we'll be over there. Guys, drop an Otter in the chat for the Otter gang. Let's go check out Bitcoin's chart right now and see how that is looking. We are coming down. I want to show you guys what we have here. Let's get to this chart. Nope, I got too many charts open. That is not the chart. You are not the chart I'm looking for. There we go. VIX. That's it right there. Let's go talk about this one here. And let's just throw on the moving averages here, guys. We'll turn off the Pi cycle chart, turn on the moving averages, and we'll just take a look here. I'm going to put this on, and we're going to turn on all of these on the SMAs. This is the MA ribbon, and you can go in and set what type of ribbons you want, what time frames you want it on. It's pretty nice. So the one that I'm watching right now, though, is going to be the 300-day moving average. And this is the level that I called last night in our Discord. And it was pretty important, in my opinion, that we were catching it and that it needed to hold, but was not sure how it would hold. Just because we have so much bearishness. And I don't think the pullback is done, just so you guys know. But taking a look at this, this is the one that's on the thumbnail here. And this is our 300-day simple moving average. Let's go back in history and just take a look here at how this has played. We've had a couple of outliers here where we've broken beneath it, but pretty much for continuation of bull markets, it is the level that we have to catch, right? Take a look here back in this cycle coming up right there. We broke beneath it for a little while and then back into it again. Once we get beneath it, guys, and we retest this thing, this is not a good place to be underneath it, because if we retest and we reject on it, that typically sends us to more lows, and you can see how it became this massive resistance back here in 2022 during the bear market. Once we get above it, though, and we hold it as support, it typically can give us a continuation of upside. Last night in our Discord, I dropped on here and said, hey, guys, we are testing right now on the 300-day, and you can see we tested it there on the daily last night, and it has held perfectly. So this is the level that I'm going to be watching in the sand right now. This is the line in the sand that we're going to need to hold. Ironically enough, this also aligns with my support zone here that I called Bitcoin's last stand, which is based on a volume node over here, and it's aligning with that 300-day simple moving average perfectly right now. So I am watching that to see how this is going to play out for us. But what I am really thinking that we might end up seeing is we got a bounce here, $80,000, $80,011.41. This would be a 3.28 pullback. We need to hold above that on a monthly close. We've talked about that here on the show numerous times, but I actually think that we do get a bounce up to here, and that is going to hit the 200-day simple moving average. If we get a rejection off of that, guys, we are very likely going to come back and at least retest that 300-day, but very possibly break it. I still think that we see our visit down to the point of control here. And if I put this on the daily, you'll see where that point of control is coming in at. That is going to be off of this fixed range volume profile. Massive, massive volume node coming in right there. That point of control comes in at $67,600, $67,700. That would be the level that I would think that if we do not get a hold, a catch in there, we could be looking at some trouble. Now, one thing to point out here is that if you look at retracement levels, and I know that $67,000 seems like a long way down, but let's just go in here and take a look at that, guys. That would be a 38% pullback, and that is not too crazy when you look at the percentage and what we have done historically. Now, one thing that I am hoping to see is a pump up a little bit here, but I'm hoping that we don't get too many people FOMO'd in. Just because a market moves does not mean that that's the direction on a permanent basis, okay? And so I'm thinking that a lot of people may go, that's it, we bottomed. And so I say this with caution when I say Bitcoin's last hope, is that, yes, we may have caught the 300-day. We are not out of the woods yet, and you're going to get a full breakdown on why I do believe a recession is coming to a household near you very soon, and today on Crypto Coin Mindset show. So make sure you tune in on that. Can we get a link to that channel? I think you may have already dropped it once, Alexandra G. But yeah, we're going to be there talking about why the Fed may want a recession today. So the point that I want to make here is that we might get a little move up, but don't get too bullish and go all in. Dollar cost average is the way. And the reason for that move up to the upside that I think we could be getting, guys, is because we have now closed out when we hit the 200-day. This is a 200-day coming in at the same level that the 300 was on the non-futures. This is futures. It doesn't include evenings. It doesn't include weekends. And so therefore, there is less data, consistent data that is constantly in. Bitcoin chart is 24/7. Futures markets they don't have weekend weekend data. They don't have nights. And so everything's a little shifted, right? But when we look at this, we can see that we got a bounce down here at the 200-day. We closed out this previous CME gap from back here in November 2024. Now we have one sitting right above us. Here's the key thing to this, though. I do think that if we go up to close this, which is very possible, we're looking at a level of $87,345. That would be a lower high. That is a bearish pattern, okay? But also, it's coming in line with the chart prime dynamic reactor here on the daily also, and that would be a key area for rejection, rejecting right on the dynamic reactor, closing out the CME gap, set a lower high, go in to set a lower low, and on the futures, head down to that 300-day simple moving average also. So guys, if we do get that move up, be aware there's a CME gap. Again, the top of the CME gap comes in at 87,300-ish, okay? So if we get up to that area, don't FOMO in because you go, that's it, we bottomed, we're all in, and then right here it rejects on you, and you now round trip to even a lower number. Be very, very cautious. That is the word of the day here in the Piper Academy, caution, right? I do want to point out also just how powerful the moving averages could be for you guys. If we go in here and we look at this 4-hour, I just want to show you what the dynamic reactor has done on the 4-hour on Bitcoin here. As soon as it loads in, load for me, please. Loading. I'll drink coffee. Oh, there we go. You can see here, this has been resistance for a while on the 4-hour, and any one of these, mind you, you had a little outlier there, but it didn't really pump. You could have set a stop loss, still been fine. But every single time we've gotten up to this on the 4-hour, it has pretty much been a rejection for us. Even if we went up to 88,500, we could still be in that rejection area. And you can see quantum reactor, dynamic reactor, both pointing to the downside. That has given us the idea that down is the trend. So be very, very careful. That's all I got for that. Let's jump back over here. OC, that's my little Bitcoin breakdown, man. Are you seeing anything on your side with Bitcoin? Or do you want to jump in and knock out an alt before we jump in to talk about what the analysts on Wall Street are saying about the possibility of lower lows? Whichever one you want to go to, we'll kick it over to you. OC, what you got?
Absolutely. Thank you. So just doubling down almost on what Piper mentioned. Remember yesterday, and this was yesterday's show, when we're talking about this area of entry. If it's a long entry that we've been talking about, right, for a long time. That's what I meant to say, sorry, for a long time. Nonetheless, we were talking about jumping into this area right here, wicking inside this area. Why? Because we were already hitting an order block. Remember that order block right there? We were thinking to take it out. Why? Because we have a loud order block and a high order block, and between them both and the volume that they represented, we needed, or we were waiting for volume migration and volume being taken over, right? So what happened there? It is basically what we were expecting. There we go. We dipped into that area almost exactly right there, and we are bouncing. So now what it's going to be? Well, then we need to wait for our rebound here start breaking through the zero line, and that's when I'm going to start getting bullish once again. For right now, let me just get rid of these alerts so far so I can reposition them. And what I want to say at this point, it is that most likely we're going to be ranging here, right? We are defining a range. This could be a slightly down range here or up range here. That is unknown until now. And where we're going to be confirming it once we bounce up of this area. Why? Because we have a top, basically a double top right here, but based out of one single bottom. We're going for a secondary bottom. If we are able to match this high or the previous high, we are going to be confirming that range in here that could be marking, as Piper mentioned, could be marking the bottom, but that depends on the macroeconomy. I heard Piper saying FOMOing, right? FOMOing, that's going to be the word of the of Piper. No, just kidding, guys. That was a joke. Bad joke. Do not FOMO in. That's the complete thing. Yeah, I know. But my brain just only catches that, my friend. All right. So talking about that, we have a big trend line here coming up, or coming down, sorry. That's going to be our worst enemy if we can make it out of this area here. So I will be expecting that America coming in strong, making the first rejection, maybe breakthrough, and then a last bounce of the trend line. So let me recycle this somewhere around here, and this is gonna be the next upcoming movement that I'm gonna be expecting. So far, let me just bring up something that is out of kind of like it really is jaw dropping for me, right? Watcher Guru here 23 minutes ago, just in President Trump rises tariff on Canada steel and aluminum to 50%. That is ginormous, guys. This is something, yeah. And right after that, 12 minutes ago, President Trump says all tariff on Canada will disappear if they become our 51st state. Wow. Boom, wow, we'll see. I mean, yeah, man. I don't know how to feel about this. But it certainly is changing the geopolitical aspect of our world as we know it. We'll see how that develops. Let me throw it back to you, Piper, and then I follow up with some altcoins behind you.
Awesome. Yeah, I just want Alex O Crypto to be addressed directly by President Trump when he says "my fellow Americans." So shout out to Alex O up there in Canada. Let's go take a look at a couple of things here. I got an article that I want to talk about. It's talking about Bitcoin's $70,000 retracement, part of the macro correction in a bull market. And so the question was asked earlier in the chat. Let me go see who it was here. I don't want to misstate. If I can find it quickly, someone said, "Are we in a bear market?" Yes, Justice Sub said, "Is it a bear market yet?" Yes and no. It is perspective of time frame. Are we in a micro bear market? Absolutely, and that is just really defined by multiple days of lower lows and lower highs. So yes, we are in a micro bear market. Are we in a confirmed macro bear market where AKA for crypto, the crypto winter? I don't think we are yet. I still think that we might see some rallies in there, and the reason for that is because of the VIX. The volatility index is the thing to watch. We talk about this all the time on our channel. We look at it here on CNBC and see how it's looking right now. Let me go see. Let me just take a look here. Yeah, the VIX is up right now. So let's jump over to this and then I'll show you this and we'll talk about this article. News cam. Come on, OC, let's go. So the VIX here, this is the one I'm talking about. It's up to 29.01 right now, up 4.13%. The VIX index for me, I don't like to get involved in any type of trades at all when the volatility index is above 20. And the reason for that is because this is Chop City. As Alex O says all the time, Chop City. Every time that Alex O says Chop City, I instantly go look at the VIX and I go, yep, he's right. This is Chop City because we are above 20. So when you're looking at this, you can put it on your chart and I have it on here. Just to watch. It's the VIX. It's VIX is the ticker. And you can see, I mean, when the volatility index is up, prices getting super choppy and lots of swings. And that's how you get liquidated or how you get stopped out very quickly. And if you're not in and out taking your profits, this high VIX is going to wreck you. Matter of fact, if we jump over here, I've got this chart that I call it the book chart where I can do side-by-side comparisons. Everything's locked in on the time frame, and when I move, you can see the cursor. And you can see here on the left is Bitcoin, on the right is volatility. Look, high volatility, we dump on Bitcoin, right? As it's going up, you can see we go into this massive chop here the higher it gets, right? Look here right now. Look at this chop. Look at these swings that we've had here on the daily based on the high volatility index. You get back over here, look, up, down, like the massive sideways volatility, chopping everyone out, all in this period of high volatility. So when this thing is above 20, I prefer not to trade. Why? Because that means when it's below it, that means we're getting trends going on here. You can see here, it's pretty low. It's in the green on my RSI. This is RSI primed. It's a free indicator from Chart Prime. Drop it on there, put it on Heikinashi. It's all color coded with your candles. Look, nice and green. We're nice and green. Look, what were we doing? We had a nice little trend up, and then we had a nice little trend down for scalping. If you put this on a lower time frame, you'll see it even better. There we go. We had a nice little trend of retest and up, right? And look, the volatility was getting lower and lower. Start to get into these high candles here, and the RSI starts turning red. And look, you could trade that, but look at some of these pullbacks and bounces that we had here, guys. Some of these were as much as, 7.8% without any leverage at all. So yeah, that's when I don't like to mess around when we're above 20 at all. And I do think that this is actually going to get way up into the 80s, guys. I think we're going to see an 80 VIX by the end of 2025. And that's not going to be a place that I would want to trade at all. That is definitely DCA territory, in my opinion. So that's the volatility index. Let's go over and talk about this news article here, though. Bitcoin 70K retracement, part of the macro correction in the bull market, according to analysts. While Bitcoin may experience a retracement to $70,000, this remains part of an organic correction within a bull market, according to this individual, Nansen, and what he told to Cointelegraph. Bitcoin's potential retracement to 70K may be part of the current bull market, despite crypto investors' concerns of an early arrival of a bear market cycle. Bitcoin fell more than 14% during the past week to close around $80,000. Actually went a little bit lower than that, but it did close a little bit higher after the bounce on that 300-day simple moving average. Despite the drop in investor sentiment, cryptocurrencies and global markets remain in macro correction as part of the bull market, according to this individual. I'm not even going to try to say that name. I will butcher it. Principal research analyst at Nansen's crypto intelligence platform. So most cryptocurrencies have broken key support levels. Fact. Truth, that has happened, making it hard to estimate the next key price levels, the analyst told Cointelegraph. This macro correction, U.S. tech will be down by 3% in the future as discussed, so we have to monitor Bitcoin. Next level will be 71,000 to 72,000, top of the pre-election trading range. Historically, we have never gone beneath the price level on election day after it has hit it. So after election day, we have never gone down and broken past that level. I think right now it's around 67,600. LBC tracks that very closely on Markets After Dark right here at Piper Academy. Every night he's on Sunday through Thursday, because he does it for the Asian market open for Monday through Friday. So he talks about that all the time. And so that pre-election range, that would be a key level of support, in my opinion. Also, we are still in a correction within a bull market. Stocks and crypto have realized and are pricing a period of tariff uncertainty and fiscal cuts. No Fed put. Recession fears are popping up. With good reason. We should have that awareness right now. The Bitcoin correction to $70,000 is normal for a bull market, according to Arthur Hayes, billionaire in crypto. Might know what he's talking about a little bit there. He said, be effing patient. Bitcoin likely bottoms around 70K, 36% correction from 110K all-time high versus normal for a bull market. So that's the levels he's watching there. And then this one here's when Bitcoin will bottom and what's next, according to industry experts. Bitcoin and crypto markets are sinking further in a deepening correction, but it has all been seen before. It's corrected 29%. Yep, we know of that. Rec Capital looked at previous cycles, noting that the average Bitcoin correction in 2017 was 35%, and in the 21 cycle, it was 37%. If it is to fall between these levels during this market cycle, prices could drop as low as $70,000. So there again, another $70,000. I saw someone in the chat say patience is key. Absolutely. According to Arthur Hayes, he says that's the same thing. All there on the same level of the $70,000 range to watch. So 70K. We'll see. My concern is, my worry. Here's Bear Piper for you guys. Okay, Bear Piper, Rockstar City. Here we go. What I'm watching is, what if we get down to that $70,000, and that is when we start to see the recessionary cracks start to widen. Even if they don't lead to a full-blown recession, what if the scare from these cracks being seen is hitting about the time that we hit 70K and we start to drop below those levels? We start to see things like Ethereum Foundation get liquidated. I think these are all things that people will go, man, I remember Three Arrows Capital. I remember what happened with FTX. I remember what happened to Alameda Research. These are all things that we saw then where people were getting liquidated because they were overexposed. I need to get out now. And so at that point, you've got people selling at a loss. That's why I'm saying right now, guys, until we see that VIX settle the F down, and we see that we're starting to get higher highs and higher lows, you do not need to be buying the bottoms just because it's the bottom. Wait till there's a confirmed level of a higher high and a higher low, giving us indication of a trend moving in a direction, right? I guess it would be that way for you guys. Trend in the up and right position with higher highs and higher lows being set. Once you get that confirmation, then you can start to come in on those retests of support on the way up. That is where you're going to be making the best reward to the lowest risk, right? Once you get a confirmed trend moving. But right now we have a lower lows and lower highs. And so until we start to break that trend on price structure, you need to be cautious because if we are continuing to see the volatility chop and the way that it's doing, and make sure, by the way, that it's not just a higher high. Because if we've been seeing liquidity sweeps, and I'm sure OC can show you some on his chart here in a second, he can show you on the chart where the bad man took your money on liquidity sweeps and said, yeah, let's go take out this higher high, and then let's just grab that liquidity there, and then we'll go down for an even lower low. So you want to see that confirmation of trend take place before you start to get in. Remember, when you had your whole steak, you got your whole tenderloin of a beef, right? You don't need to get the ends. That's actually the tougher steak. Just get the center. Cut out the center cut on that and eat well, right? So you don't need to get that bottom peak. Let it make a higher high, higher low, give you some confirmation of trend, and then you can start to, dollar cost average even on those levels of support. So if you guys are not in our Discord and you don't know, we actually do have a DCA plan. It's called the Piper plan. It gives you weighted values to dollar cost average in, and it also has an exit plan on where you should be taking your profits 30% out, 50% out, the other 20% Hail Mary. And that whole thing, by the way, for just Bitcoin, you get for being a member right here on the YouTube. If you want all of the altcoins, then of course there's a $20 a month one there. But yeah, guys, if you want just the Bitcoin one for dollar cost average plan on the Piper plan, $4.99 a month right here. All you gotta do is click the membership button. OC, what do you got for us, man? I'm done shilling our Discord, but I think a lot of people over there have made some great calls. Yesterday I put out this. Let's pull this up here. Is this it? Yep, this is the one. Let me show this, and then we'll jump over to your chart. Yesterday, I put this chart out. I said, guys, that orange line there on my chart, and I dropped the picture right there above OC's head on my chart. I said, that line is the 200-day simple moving average on futures. The red one on the following chart is the 300-day simple moving average, and Bitcoin is testing it right now as support. This is a critical level for Bitcoin to hold. You can see right there. Gave that all to him in our Discord. Nice little support bounce there on the 300-day. Alexander G, Supernatural. Shout out to everybody that saw that. But yeah, we definitely did get that bounce on the 300-day, and that was right there. So you could have traded that. We give a lot of info out in our Discord. OC, let's jump over to your chart and let's see. And let's show some examples on what a liquidity sweep looks like.
Absolutely. Let me just talk about a little bit on whether we are in a bull market or bear market. And I want to bring some perspective here, and then I'll show you a couple of sweeps in there. First of all, let me just turn off my indicator so we can see pure charts. I was giving this class to yesterday, and also we talked about this a week ago. So let me show you first one of the cycles here, right? When we start talking about this cycle, whether we look at the next cycle, this is a measurement from the top to bottom cycle where it started and when it ended, right? Let me just move it and we'll see that this is when we started. There we go. The bottom one, maybe two, three and something else around here just to match the very first high in here, right? As you can see, what is happening, we're having a bigger and more prolonged range, right? If we take a look at the previous cycle, look at that, we can even see it. So look at how many times this cycle was this cycle, right? And that has to do with market capitalization, right? So what I'm trying to say here, it is that, remember, if in this cycle we had like a whatever size, right? Not percentage, but size right here, we had a drop down, right? Well, then in the next cycle, that size, and let me show it to you very quickly. Here we go. Like, for example, this dropping here, right? I mean, it is, look at compared to the very first movement. So this is where people start saying, oh, are we in a bear market? Well, then not there yet. And look at how many or how big we actually went to hit this size, right? Give it just 1 second. There we go. Perfect. So what I'm trying to show you here, it is that the more market cap we have, the bigger the ranges we're going to be seeing. Why? Because we have much more money and we have not yet stabilized as a world reserve or as a reserve of value just yet, right? So if we can see that just a little bit of a drop down in here represented a huge, or a very, very small drop down here where we have a huge drop down next up, well, then what kind of retracements can we be expecting out of here, right? So just to answer that question based on perspective and volume and market cap, I will be looking for, look at that, this size, all right? Sorry, this is the whole bear market, right? On a single movement, and we're still not bearish. So are we getting close to maybe a bounce? I would say so. And that is because also we're looking at the market structure, little range, breaking out, maybe finding support on the previous range, and then being upwards here. The market structure is telling us that for the kind of retracements that we are expecting, so bigger retracement than this, all right, bigger retracement than this one, we need to get even higher to have that retracement. And why is that? Because look at this on the previous, there we go, top. All right. If we just measure this at the very bottom of it, we did not even hit the previous one right there. All right. So the same thing here, kind of like the same measurement at the top. We want to at least hit it or being above it before we have that whole retracement, right? So once again, market structure wise, we're not there yet. All right. And also talking about market cap growth, we are not there yet also with that movement, right? Another thing that you might be just could be a confusion will be when you see these kind of like a movement when we're flattening out. All right, this is a perspective of volume market cap, right? So which means that we need to right click in here and turn on logarithmic. In this case, you see that I did not change anything here. Let's go to maybe 4 days here. Change this. There we go. I changed basically nothing. And you'll see that now the measurements, they start shrinking instead of getting bigger. Why? Because this gives you a perspective on market cap per volume movement, if that makes sense. Nonetheless, if we just look at with not logarithmic, which is what I do advise to start trading here, to do a trading analysis, well, then we'll see how those bigger ranges start appearing with more market cap. Other than that, talking about altcoins, let me go very quick to Ethereum, because yesterday we were talking about going to these lows in fact, let's go to the 4 hours in here, and we were talking about this sweep of the lows, right? So we had this double bottom, but we also had a trend line here. And remember, we were talking about, you know what? Well, then it seems that we have that double bottom, and nope, sweep of the lows, and then going to break the first support and then break out retest. So right now, until we start seeing, this is what I wanted to show you. There we go. Until we start seeing that breakthrough, that zero line, we know that the volume is there, not to be manipulated and not to be being moved farther, neither up or down, right? So another important thing is liquidations tool. This is a free tool from Chart Prime. You can use it to start figuring out where is it more probable or easiest for the market, for the market movers or market creators to make the move or to manipulate the movement, right? Basically, if we were right here, where are liquidity to be grabbed? Right down here. So it will be worth manipulating sweeping lows, right, to get these guys, and then just releasing it for the market to do its thing, right? So usually where you're going to be asking yourself, where is it easier to move that price, lower or higher, right? So that's a little bit of an example of a sweep of the lows. We're not there yet on an entry of our Ethereum. We need to see that break of the zero line right there before we start thinking into a long position. One more thing here, we were talking about the breakout retest on this range. The same apply. Look at that. We were looking at this little range, not about the breakout. It's about the retest. We talked about this retest, and off we go. Where we found the gap right here between the liquidations. So far, this faint liquidations doesn't really make much more sense, although the push through, that is a momentum liquidation. Why? Because they sell, they say they sell, and then, well, then just basically on the previous orders where you sell, it goes a little bit lower, right? But as you can see, we have stopped because we have a gap. And then what's going to be easier, to bounce or to get these guys? So far, maybe to get these guys until we are breaking through the zero line to get a little more of that volume not being able to be manipulated, right? So that's what we're seeing right now. And OM just basically breaking through. We did not make it through that trend line. We can still do it. We're making kind of like a goose head. What I want to see with this goose head is a clean breakthrough the zero line in order to complete our predictions. But so far right now, I'm going to be just fainting this one out because I believe that this has reduced its possibility to play it out. So basically like that. And right now we could be just going either lower here or for a double bottom. We need to break through, retest, and off we go. Remember, that is what we are expecting so far. So other than that, that's what I got, Piper. Turning it back to you, my friend.
Awesome. Appreciate you, bro. So yeah, I'm looking at a couple things. I got some bad news, everyone. Bear Piper, put on the bear hat. Yeah, I got some bad news for you. I'm looking at a couple of things here. One, Look On Chain just came out with their update for March 11th. That is today, for the ETFs inflows and outflows. Guys, institutions are not buying the dip yet. Okay, just so you guys know, this just came out hot off the press right now. Outflows in the past 7 days, 12,713 Bitcoin, worth over $1 billion. 1 day inflows sitting here, negative 4,667, $370 million sold of Bitcoin in the past 1 day from all 10 of the ETFs there. Looking at Ethereum, Ethereum down 64,173 Ethereum in 7 days, 16,179 Ethereum for the past day. So they are not yet buying that dip. So be aware. And then the other thing that I wanted to show you guys was this. On my weekly chart, guys, man alive. This is the Caprioli ribbon here for hash ribbon. We have just triggered a weekly capitulation on Bitcoin. And I want to show you guys something for the miners. This, going back here and looking historically, okay? Let's go back. Here we go. We're back in 2019 now. We had a capitulation here. Keep in mind, when we're above this moving average of the pi cycle versus when we're below it, okay? Below it, drop, right? Below it, drop. Below it, that was the COVID. So that one, that's an outlier, okay? But here, above it, it went up. Above it, it goes up. Above it, went up a little bit, and then we started to drop, and then it triggered again, and that went sideways and down. Okay, move over here. Here, below it, down. This one here kind of went sideways and up slightly. That was the bottom of the market back in 2022. Okay, and then look here, we were above it. It did end up breaking and going below, but here we were above it. It went sideways before it dropped. Now we're here, guys, and we're below that moving average. So be aware. Don't be scared. Be prepared. I'm just letting you guys know this is not a good look right now on the weekly, being beneath that moving average, and the outflows versus inflows on the ETFs not looking very strong right now either. So, OC, we're about at the top of the hour. What do you got for the people on the way out, man?
So guys, thank you so much for joining today. You caught me eating once again, guys. I know it's unscripted and we called it at the beginning, but I promise you it is not. But drop those likes, guys. It really helps to spread the news, the interest in Bitcoin, and also the what we need to show you guys for you to be safe right there on the markets. So far so good, guys. Thank you so much for joining, and as always, well then I guess I see you guys tomorrow.
Outstanding. Hey guys, we are about to shut this down, but I'm going to be over on Crypto Coin Mindset today at 6 p.m. I believe it is Eastern Standard Time. So guys, make sure you tune in. We're going to be talking about does Trump need a recession? Is he trying to have one set? I think he is. We're going to be breaking down a lot of data of why recession resets help our economy in the long run. But yeah, pain could be in between here and there. So we're going to be talking about that over there. Don't forget to tune in today at 2 p.m. 4 p.m. Eastern Standard Time. Also for Trade Academy here with Trade Intuition. And then this evening, Markets After Dark tomorrow morning, kicking it all over again. It will be BC Port Corp with Good Morning Crypto. And we'll be back here at 10 a.m. giving you guys CPI data. That is all coming out tomorrow. It's going to be a very important day for information. So if we get some CPI data tomorrow that says, hey, inflation's slowing the F down, we might be okay there, guys. So be here, tune in. We'll break it all down for you. But until then, guys, trade safe. Remember that VIX index, that should be your deciding factor if you really want to get into a trade on low confidence or not. And if you're going to, use some risk management, guys. We'll catch you guys next time right here on the Morning Market Report. God bless all of you. Thank you much. Love you all. Later.
I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels flow low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, former Mexican spaghetti, yo. Crunch crypto with a deep dive to reject dime. And if you like the visual powered by Chart Prime, then you were part of that alumni, that's all spine. But if you have, step fall back to offline. Boom shakalaka! We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels flow low. Sound off to get rhythm, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my alumni, you know what I mean.
That was awesome, dude!